Hello, everybody. Nice to see you today. So this is the fourth webinar of our series. So we started the webinar series Global Trend in Business to facilitate the talk between our alumni, between business and our students a month ago. So this is the fourth seminar, and today I would like to introduce you Natalia Lyarskaya. She graduated from our faculty almost 15 years ago. Yes, so I'm happy to be the classmate of Natalia, and actually Natalia now is a chief data officer for the Zest Money. That is the largest digital fintech company in India. Natalia moved to Paris to join Ph.D. program in economics after HEC University, and then she made a very interesting career in fintech. And I do hope that Natalia will share some ideas about her career, not only about fintech, with our students. So I'm really happy Natalia agreed to join this webinar. Thank you very much. So I give a floor to Natalia.
Hi, everyone. I hope you hear me well. Thanks a lot, Anastasia and Oksana, for this opportunity to talk today. Really my honor and pleasure to be here. Anastasia already talked a little bit about me. So let me first begin by telling a little bit about my background and how I came to financial technology sector. So I studied in High School of Economics in economic department. I made my bachelor degree here, and then was doing a master degree in institutional economics. I pursued a double diploma program in master together with the Université of Paris 10 in Nanterre. And after I graduated, I did a few internships back in Russia in a FMCG company in marketing department. But during my studies, I realized that I love to work with data, and I actually want to continue working in a company where data is the key IP and key value for the company. So I completely changed my sector, and I moved to the financial sector. I joined a company that is called CRIF, that is now one of the biggest credit bureaus in the world. At that time, it just started its operations in Russia, providing the modeling solutions for Russian credit bureau. And this is where I spent a little bit of my time, and then moved to the headquarters of this company in Italy, where I was doing and developing scorecards and financial models for financial institutions and banks. I then decided to pursue a PhD in economics, and was partially doing some consultancy work and studying at the same time. Again, the PhD gave me a lot of opportunities to have a broader background and also to enhance my analytics capabilities. But afterwards, I still decided to move back to industry because that was where I could see much faster feedback to the work that I was producing. And I had an opportunity to move to London at that time and join the startup company that is called Wonga. At that time, it was 2011, was one of, I would say, a revolutionary company at that time that was producing alternative payday lending loans to the individuals, to the consumers. I joined the company at the very initial stage where there were just 10 employees, and I was running there again some modeling and analytics function. And with the company growing, I actually seen the company grow from 10 people to almost 1,000 people at some point. The latest, I was running their data science team and innovation team internationally. From the UK, the company moved to South Africa to have its operations in Canada and Poland and in Spain. Unfortunately, it is a sad story because the company got bankrupt, and I will tell you a little bit more about this case study later on, why it happened. And in 2015, I joined another startup company, again in the financial technology sector, but this time in India. And this is where I'm currently working and leading the data and AI machine learning initiatives in this company. So I would say overall, I have around 10 to 12 years of experience in financial technology sector. And this is what I would like to share with you, some of my learnings, some of the trends that are happening, and why I consider this sector as one of the most attractive from employment point of view, of course, but also from everything that is happening on the market, all the transformation that is currently happening, especially driven by the pandemic in the banking, in the financial sector. So that will be the topic of my presentation today. Let me share the screen and you tell me if you see it or not. I hope yes. Great, and of course, do not hesitate to ask me questions. I want this discussion to be from both sides, and the more questions you have, it will be the more interesting discussion we will have. So let's talk about digital financial services. I will talk a little bit about where it stands today, about a few companies that reach the unicorn level, and what is the topic that is much more close to my heart is about data and the power of AI, artificial intelligence. Briefly about how I organize this talk, I will talk about what is a fintech, a little bit about the market overall, what verticals I included in the market. I will then pick up one of them, again, mostly close to the experience I had in terms of alternative credit and BNPL, which stands for Buy Now, Pay Later product. We'll talk a little bit about this and how this product is currently developing. We'll briefly touch upon my current company as well, just give you a bit overview. And last but not least, I will talk about artificial intelligence in the fintech sector. So what is fintech? I'm sure you all know, but let's start with the basic. Fintech stands for financial technology. And I'm sure every one of you made either a bank transfer or just reached and accessed the bank statement online, or just paid using either wallet or the phone. And it already means that you're part of this multi-billion-dollar industry that is currently changing the globe. So you're already the users of the fintech sector. There is no actually formal definition of this, but on World Economic Forum, there is one that I believe the best reflects what actually stands behind fintech. And I will cite here, basically, fintech refers to the innovative user of technology in order to design and deliver financial services and products. And but what it means that many companies are just using various technologies, mobile technologies, big data technologies, a lot of analytics and AI to create products in order to best tailor the customer taste and preferences. And this is what we see actually happening more and more, that customers are becoming more and more demanding and demand the products that better fits their needs. A few examples. So fintech industry is a huge one. There are just a few examples here I put, like the use cases where you can see the application of this transformation that is happening, but it doesn't stop here. There is many more use cases, and the fintech market is actually huge, as you see later on. I think the most prominent one, the most that you're definitely using in your day-to-day life is payments. So there are plenty of electronic payment systems, wallets that allow you to transfer immediately money from phone to phone, from phone to card, to different merchants, make payments using QR codes, and so on. So this is, I would say, the biggest market that appeared with the use of smartphones. Digital banking, this is again the sector that is getting transformed more and more, and this is from basically from where it all started, that the end consumers were not happy with the just traditional banks, with the need to go to the actual agency and talk about the needs they have. The digital lending is the one where I will talk a little bit more today, is about getting loan, and specifically for consumers that are previously excluded from the official financial system. And again, we'll talk about the reasons why it is happening and why fintech companies are actually succeeding in this specific sector. Wealth management companies, again, a lot of robo-advisors appearing in order to serve the customers better and manage their wealth in a better way. There are insurance companies, again, a lot of analytics and data is used to create more robust models for the estimate of claims, for the estimate of the premiums, customized premiums that the users need to pay. A lot is happening on the capital markets, on raising funds, on the trading. Again, many things are driven by advanced AI systems. The loans provided for small and medium businesses, pretty much similar to what is happening to the consumers, but more on the individual proprietor side. Again, something that was actually booming a lot during the pandemic times. There's a lot of governance programs as well being involved in this. And real estate, again, one of the examples where the mortgage lending is moving away from the traditional mortgage loans that one can get from the mainstream bank, but to more digital solutions that financial technology companies can propose. I didn't mention here, but other examples can be the crowdfunding as well, where a lot of charities and fundraising is happening using the digital platforms. Blockchains and cryptocurrencies as well can be considered as part of the big financial technology markets. They are also quite a separated block and use its own regulation and a lot of peculiarities of why the things are happening today on the market. So what is different about financial technology and from where the need came? And I think the biggest difference and the biggest need came from the fact that the users became much more demanding in terms of what they expect from their financial services providers, from their bank providers. With the development of the smartphones, they eliminated the risk of someone who come to the bank branch, who is spending his time queuing and need to do some basic activities like depositing money or the opposite, just withdrawing the money. So all this in the generation of millennials or Gen Z population that came later on became a need. And much more people, many more people were spending time online, spending much more time online, and together with just creating or looking through some content, they also wanted to do all their transactions online. So this is where the focus became on creating the product that doesn't fit just the average customer or the average target audience, but creating the product that is much more personalized and has different functionalities, different accessibility for different users. And this is where the fintech companies actually succeeded a lot. So again, the use of AI, the use of data and technologies allowed them to do it. So if we talk about specific lending, basically now the loan can be accessed by many users in a matter of a few seconds, while before they basically had to complete the long application form, bring all the necessary documents, the whole long process of reviewing it, which could take up to a few weeks and even months in order to get the solution. So that's what actually created the need for new companies to be appearing on the market and providing this kind of solutions for the end users. When it actually started, I think we can look back at around 2007, where the first iPhones were just released, the first social networks appeared, the Facebook was launched somewhere in September 2006, the Android was launched the year after. So this is where the users started spending more and more time on the smartphones. And just an example, in the case at this time, the adult was spending around 12 hours per week on the internet, and by 2014, just in a matter of 7 years, the time actually doubled. And I'm sure now this numbers are actually significantly more, with people spending almost like 6 to 10 hours a day on their smartphones. Of course, at that time, there were no Airbnb and Uber or Spotify. That also made a shift towards much more customized solutions, although in a different space. But again, this is what actually created the need and showed an example of users demanding more and more customized solutions. The first banking app just appeared around 2010, 2011. And from this point, more and more banks started combining the digital solution with the offline solution for the end users. But I would say this probably was a starting point. And if you look now, what basically it created is that all the payments, the majority of the payments currently are happening on the mobile smartphones. The banking, the just recent regulation in Europe, PSD2, which allows users and banks to share the net banking details of the user and share it through APIs in an automated way that allowed, again, many companies having access to the detailed financial information about the users and create solutions on top of this. Insurance, as well, as I already mentioned, leverage a lot of data and allow to create much more personalized solutions, and at the same time mitigate risk. And asset and wealth management as well, moving more and more towards robotics and AI automation. But who are the players on the fintech market? You might think from my talk that only some startup companies are present on the fintech market, but in reality, it is not the case. Actually, fintech market presents a sort of ecosystem where all the different players are having its own role and closely collaborating with each other. So we are talking about the governments and some regulatory bodies that actually started looking at this market and quickly understood that there needs to be a separate regulation like in the UK, FCA, Financial Conduct Authorities, in many countries as well, their own laws and bodies that look for the right implementation and enforcement of the mechanism. There are also traditional banks and financial services companies, and especially in the pandemic time, they actually understood that there is a need for them to jump on the train if they do not want to lose their customer base, and find a way to collaborate, either collaborate with the existing new companies on the market, with the startup companies in different segments, but also to participate themselves either in investment or creating sort of incubators and acceleration programs where themselves they can start building solutions on top of the existing products. Of course, there are technology companies itself. So the company I'm working currently is a technology company, is a technology platform that provides the link between the banks and end consumers. And use various technologies and data to do so. And as well, companies that are completely new, creating completely niche products, the one that target to the audience that is not covered by existing products or existing solutions. Just to give you a few quotes from the top management of the big banks, and this is how they claim that they're actually a technology company. You can see JP Morgan or Goldman Sachs or ING CEO who also claims they want to be a tech company with a banking license. And I think majority of the banks now consider themselves a technology company, either exploiting themselves new opportunities or investing heavily in acquiring various capabilities through the third parties. Just look a few questions that already appeared. How Fintech could be used effectively in agriculture? All right. I will just address some of the questions later on, and some that are referring to what I'm currently talking about. I might pick up them immediately now. But what are the limitations of the fintech? I see you're talking about comparison between traditional banking and fintech. I think it's a very good question. From my experience, fintech, I think the biggest risk is happening on the regulatory space. So if we look now in some countries, the regulation is already there. That is actually quite a good advantage because the players already know the frames within which they are operating. In many markets, the regulation is still either evolving or doesn't exist at all. And this is where the risk happens. And I promised you to talk a little bit about the company I worked for, Wonga, and why the bankruptcy happened. The major risk actually came from the regulation. So I joined the company in 2011. The company was founded in 2000 and the late 2009. And at that time, no one was talking about alternative lending. No one was talking about the fintech industry and yet about regulation of this industry. And this is where the company could set up the high interest rates, could set up the late payment fees. Basically, the product of the company was a payday loan, where the users who couldn't get the loan from the banks, especially the low-income users or customers with a low credit bureau score, were rejected by the mainstream banks. They were addressing themselves to the alternative lenders. And this is where they could get money for their needs, but the interest rate was very high. And especially if they were missing on their repayments, this is where the bad things were happening. The late fees were huge and were accumulating. And that's where, from one side, the company was making money, but also from the users who were coming and basically taking loans on a regular basis. So from a repayment point of view, you may see these users as the good ones, but that behavior is not sustainable. And at the end of the day, sooner or later, these users will default and will accumulate big debt, because basically they were going and shopping on their credit among all the companies that could give them. So at that time, there was no regulation around these companies reporting to the credit bureau so that this financial information could be available to the rest of the players. So as you could see, there were a lot of black holes where the company could make money in the short term, but that was not sustainable in the long term, and the regulation was not actually saying what is right and what is wrong. In 2014, beginning 2015, this is where the FCA regulation came into place and started creating specific rules around alternative lending solutions and putting caps on the margin, on the interest rate, on the fees that end consumers could pay, and this is basically ruining the whole model. So the risk that the company was taking was not offset by the interest rate and by the returning customer behavior. And this is where I was telling you the company grew from basically having 10 people to 1,000 people. Obviously, all the OPEX costs were largely loaded on the entity who couldn't maintain high margins and high interest rate anymore. And this is what can happen where the regulation either doesn't exist or is uncertain. So that's one thing. Another limitation, I would probably not call it limitation, but the risk is that there is a lot of companies in the fintech sector rely on data. And again, there is data that comes either directly from the user or comes from the user giving a consent to share certain details, for example, cookies, or given access to the net banking details, or for example, given access to someone recording and analyzing data about how the user behaves on the web page or on the application, where it clicks, where it focuses, and so on. So from one side, this richness of data allows fintech companies to build various solutions and even more customized solutions, personalized experiences. But at the same time, again, a lot depends on the regulation. Now, we all know there is a strict policy in Europe around how cookies, about the consent about cookies, how they need to be collected. There is a lot now around whether the users and the websites can track the user and create this what we call omni-channel experience, where the user can use different devices during the application journey or just digital experience with a financial services company. Again, this now starts to be regulated, and the products that have been built around it becomes obsolete. And of course, there is ways to go around it. There are analytic solutions around it, but just it shows that there is always a risk of certain data, for example, not being available, or additional consent needed from the users. And what fintech is all about is creating the experience for the users where they do not need to do anything, basically the smoothest as possible, the least demanding any actions from the user side. And the more limitations around the consent sharing, around different agreements that the user needs to read and sign or give just even a click, it obviously creates additional drop-off, it creates additional friction from the user and decreases the value of the product. So I would say that these are the two things that are happening, and to some extent limit the, well, again, limit from one side, but creates also some frames for the fintech sector as well. Cybersecurity is a problem nowadays. Yeah, I absolutely agree with you, and I will probably address this question a little bit later, talking about AI solutions and how they can be used to prevent fraud and cyber attacks. What do you think about the future of blockchain and cryptocurrencies? Great question. Let me address it later on. Fundraising is one of the challenges that facing many startups, and fintech could be the turkey for the solution. How governments can cooperate to resolve the issue. Again, it's a great question. Let me talk a little bit about it later on or at the end. Will some traditional banks use financial technology to simplify the lending process will cause compliance risk? Yeah, absolutely. And I think I addressed it a little bit in my answer, talking about the regulatory risk. So yes, obviously there are some risk, and the more matured financial technology sector becomes, the more regulations coming together with it. So this is the big concern. And just talking from, again, personal experience, working in the Indian fintech company for the past 5 years, I've actually seen a lot of this happening, basically where the government changes rules almost like on a weekly basis or on a monthly basis, and we had to adjust our product based on this, especially around the KYC solutions. KYC stands for Know Your Customer, or how they verify the identity of the users. So using there are various methods how to do it in a digital way, and the government as well setting up various restrictions from one side, and from the other side giving some tips and suggestions how to do it. But basically, again, it means that you need to be flexible enough, or to build a product that is flexible to incorporate these changes as quick as possible. Again, the question about e-currencies. What's your example for this? How do you think fintech can be implemented successfully of the currency? Let me take this question later on the regulatory environment in India. Yeah, as I already said, India is quite a peculiar use case, because from one side, we've seen a lot of government initiatives that help the digital companies and the digital experience. Just give you a very simple example. If you, for example, in India, there is a unique identifier of the user, and actually there are 2 of them on the market, a PAN card and Aadhaar card, and this obviously simplifies the way how to identify the uniqueness of the user. Of course, there are some things as well, edge cases where it works or it doesn't work, and the coverage, again, wherever you want to go to the villages, the coverage is obviously decreasing. But to give you an example of the UK, where when there is a national security number, but is not actually used by the end consumer. So me as an end consumer, I don't know my national security number. And of course, when I apply for a loan or want to have some digital experience while doing my purchases online, I need to go and search somewhere in my archives where this number is. So obviously, it's not something that can be used by digital companies to verify their identity. And there were a lot of innovation done around how to use the combination of different data points, like the first last name of the user, date of birth, address, mobile number, to create some uniqueness, unique identifier. So just to give you an example and say that actually a lot of things that are done in India are even ahead of what sometimes is done in Europe. But having said this, that there are also examples where the regulatory environment is still not matured a lot, especially around the wallets, around the digital payments methods, and now in the pandemic times as well. A lot of things are happening. Just the Supreme Court announces certain things and basically rules the country to some extent, and the companies like ours needs to adjust and do all the necessary things to change the product or adapt it to the end user. Yeah, a lot of questions around the cryptocurrency. Let's talk a little bit about it later on. I just wanted to show you a few of data points that I think can be useful and interesting for you, and then we can come back to your questions. But thanks a lot for your participation. Really great questions and very well thought. So just to give you the landscape, if you now go to the banking page, for example, you can see that just behind a lot of things and a lot of innovation that is happening in the financial technology sector is basically taking a specific functionality of the bank and transforming it into products. And it can be about again, managing the finance, about giving the loans, about recommendation and personalized experience, about application form that can be different for different types of users. Basically taking their bank and unbundling it step by step. To show you why it is important to talk about fintech sector and to show you the size of it, just a few trends. This is what was happening since 2011. This is shows the funding, the VC investments in the financial technology sector. You can see significant growth happening in 2014, 2015, and what is important to note here that the majority of this investment were done just purely on the idea of financial technology company revolutionizing the sector to some extent, not necessarily because the company was taking a huge market share or revenue or even profits. I think majority of the fintech companies are still not profitable, probably about to reach the break even. And if you look at these numbers in the most current years, again, it is a VC-backed investments in the financial technology sector, and you can see that actually what was happening, the biggest investments were happening in 2018. With almost 2,400 deals funded during this period. Then the dynamics went slightly down in 2019 and even more in 2020, largely again influenced by the pandemic. But what we can see already in the first quarter of this year, and I think especially in the US and in Europe, the deals again are increasing, and with this speed are about to beat the record year so far. Again, yet to see, but the trends are looking promising, and the fintech sector still remains one of the most attractive in the market. Let me talk a little bit about the credit vertical. I've been mostly had experience working in two lending startups. So what is the problem? Why this vertical actually appeared and why it is so successful? So there are a few problems that exist on the market. First of all, there are borrowers that are simply unable to access credit, like credit cards or personal loans, consumer loans, and in many countries, there's a sort of chicken and egg problem. In order to get access to the credit, they need to have a good credit bureau score, like FICO score in the US, but they cannot get this bureau score because they obviously do not have the financial products that they can use and repay on time in order to build the credit history. So that's first need where actually the financial technology companies came to play the role that they started lending to so-called new to credit customers, NTC customers that were completely excluded from the financial technology sector previously. And how they did it, obviously, there is unknown risk. We do not know the credit history of this customer. They started using a lot of alternative data. They asked the customer either to share their bank statements or to share, I think at some point there was very popular stream of startups that were using a lot of social data. You ask the user to connect to Facebook account or to share the LinkedIn details, and based on this, the algorithm were running, and the companies were providing credit to those users. Again, what happened, the risk was that, of course, not everyone wants to share the social network accounts, first thing. The second, that these companies like Facebook, LinkedIn, Google as well started limiting a lot the number of data points they could share with the lenders, and ask them for a significant audit process in order to get access to this data. So a lot of uncertainties, again, to build a product that is actually relying on the third-party data that we never know whether it will be available or not. So there are a lot of companies that actually now no more exist or are about to failure due to this problem. However, the second problem exists on the market is that borrowers want fast credit decisions. I already briefly talked about it. The young consumers, the young generation in their late 20s and 30s do not want to wait for months and weeks for the credit application to be considered, but they want an instant decision. Moreover, when we are talking about more e-commerce experience, users are at the checkout and they have an option to apply for the credit limit, for example. They obviously do not want to wait for another 24 hours because maybe the mobile phone that they want to buy some promo deal will no more be available. Again, this is this problem created a lot of companies that are using machine learning technologies, AI, to give an instant decision whether they approve or decline the application using the bunch of information they have about this user. And third problem, of course, this is where the retail and institutional investors were chasing yield. So this is the high risk you take on these customers, the more you can get as well the margin, the higher interest rate you can set up to compensate and to offset for the risk. So this is where a lot of solutions have been created, and the market still continues developing. Although I would say as of today, the market has been a little bit matured. More and more companies are coming, even the players like Amazon, Google, even Uber entering the lending space, and it actually will be interesting to see what's going to happen with this type of competition on the market. Just to give you a view, again, in numbers, how this was happening, the biggest growth, this specifically for the lending, NPL stands for marketplace lending, so it is alternative lending. This is in the UK. The growth was enormous, starting in 2011 and then currently 2014, 2015. And where we are today, again, the growth continues even further. And why? Because the pandemic situation actually moved a lot of businesses into the digital space, and a lot of banks realize that if they do not want to lose their most loyal customers, they need as well to start developing either the products themselves or enter the sector through the merger, through acquisition, through partnering with various financial technology sector. And this, for example, just to give you the booming growth of the number of articles with the mentioned BNPL, buy now, pay later sector in the recent months. And a similar trend we can see in funding. Again, although the number of deals that we could see overall is slightly down in 2019, 2020, but actually in this quarter already of this year, a huge number of deals, even bigger than in any other year. So the market is definitely on demand. And again, just summarizing why this is happening. So you can see a few numbers here that from one side show the credit card per user. And in different generations, the number of credit cards is going down and down. And now the credit card, mostly the users are using not even for the credit that they can get, and very often the credit limit that the young generation can get on the credit card, if ever, is very small, but they largely use it for collecting either the cashbacks or collecting different advantages like access to the lounges, the free miles, and so on. So that's what the credit card actually started to be, not a purely financial product, but mainly the solution to retain the customer and give him additional benefits. And a few examples of the companies that on the market, on this buy now, pay later market, that are the biggest players is, I'm sure you all heard this name, Afterpay, Klarna, and Affirm, that actually went on the New York Stock Exchange earlier this year, and immediately after the IPO, the actual valuation increased almost like to $25 billion. So this again shows the potential of the company, shows that investors believe that after pandemic, the attractiveness of this market is increasing even more with more digital transformation happening and e-commerce sector booming. Let me look again at some questions. Right. Data science and AI now are reachable and affordable. What are the issues you think it can be resolved using them in fintech? Growth and researchers or the next trend in fintech could be. Yeah, let me talk a little bit later about the trends that we have. I will just briefly, again, pass to the presentation and then address the question. So this is just to show you the landscapes of the unicorns. So again, one of the markets where the penetration and the number of unicorns is actually increasing, notwithstanding the difficult times that we've seen last year. So this is a number like 67 unicorns worldwide. It was late 2020, and this year in Q1 we're already talking about 94 fintech unicorns. A couple of thoughts about India and the company I'm working on. So India is now the second biggest fintech hub with more than 2,000 startups working in the segment. And largely so because there is a huge potential. The penetration of the traditional products is very, very small. The coverage of the credit cards is probably less than 10% of the customers, let's call it in the middle income range. It's also the country with one of the lowest penetration of the consumer durables. There is big demand for electronics, for consumer durables bought online, similar for educational sector, and even more now with a lot of educational platforms providing the digital experience and the insurance. So all this shows that there is a big demand. And what is happening with the major banks is that they only address the market that is profitable for them. So CIBIL is a credit bureau score in India. Basically, the credit card is only available for the customers with a high CIBIL score, and similar for the personal and consumer loans. The banks, the big banks, provide only to the users with limited risk levels. Well, what is happening for the company like Zest Money is that we are addressing not only the customers that are served by the mainstream banks, but also the customers that are new to credit and near prime customers. And the way we can do it using AI technologies, using data, and in some cases go into the niche markets where the mainstream banks do not go, for example, EdTech and healthcare. So the company I'm working for started in 2016. I joined this company almost at the very beginning, right after the three co-founders started the entity. Until now, we disbursed quite a significant number of loans, a few million loans, and we are connecting to almost 3,000 merchants. So that's one of the fastest growing fintech company in Indian market. And what is happening in Russia? Actually, Russia is a big player in the global fintech market, and actually is going in some cases even beyond the Europe, beyond the Asia and US market. You can see I just pick up last few weeks of the announcement on the financial technology sector, and you can see how many of Russian deals you can see here. There is VTB Bank, there is Tinkoff Bank that is considered one of the biggest new generation banks globally. And he's entering now the BNPL sector as well. There is companies like Yandex who are pretty much following the Google path as well and launching their own payment system and all the technology around the payment gateway solution and so on. And actually, why the sector is very demanding in Russia? Because we have a very demanding consumer. The e-commerce sector is huge, is much bigger in Russia than in Europe, and the consumers are expecting the financial services being available for them, the payment solutions 24/7, and this is that requested the main banks. You can see a lot of deals with the Sberbank as well, with VTB, Citibank, that are creating a lot of partnerships, but also creating the solutions themselves as well. I think one of the reasons why this transformation happened very quickly in Russia is because the big banks in Russia are not as old as in Europe. The system was created largely at the private banks late 90s, and in many cases the systems that were built were at the beginning of 2000 that actually allowed the systems to already be sufficiently flexible and scalable to accommodate all the changes to it. What is happening in Europe, basically a lot of banks and a lot of traditional institutions had legacy systems that didn't allow them to scale sufficiently quickly, and only now they start doing a lot of digital transformation internally to create various digital experiences for the user. So in this context, Russia is actually one step, if not few steps ahead. There are wallets that allow multi-currency transfers. Again, something that doesn't even get exist in Europe to the extent it exists in Russia. So that's about Fintech in Russia. Let's just go through the questions. I didn't understand the idea behind BNPL and how it works. So the difference behind BNPL is basically the virtual credit card, right? You do not need to have the credit card. It is the same experience. The difference is that there are no fees. There is almost always a 0% interest rate, and there is no the fees that you pay on an annual basis. So again, to some extent, it is the experience very similar to what the credit card is, but the difference is that it provides the credit card that is provided by the banks is very often limited to the users with a good credit history, which is not the case for BNPL. So BNPL is provided for customers who do not even have credit history. It's slightly different in Russia because the penetration of credit cards is big, but that's the product that works in the way I described in Europe, in Asia, in the US. You might not have the credit card, but you may have access to BNPL. And basically, for user experience, again, in order to apply for credit card, you need to collect a lot of data, a lot of details to give to the bank. To access the BNPL, you probably just need a few clicks on your application form. So that's the biggest difference. And BNPL is basically the biggest competitor to the credit card. So what is happening with the credit card industry now that historically, there were a lot of hidden costs, although you might have the 0% interest rate, but as soon as you are late on your payments, the big interest you need to pay. You have a quite limited credit line limit on your credit card. So again, you don't know when it can be increased, when it can be decreased. The BNPL product allows you to start, for example, with a small credit line, and then you constantly increasing it with a high utilization and on-time repayment rate. So that's in a nutshell what the BNPL is. I hope it clears up. So the question is about the obstacles to implement this solution. Great, yeah. So, because I believe the bank and other major banks have all facilities, but it's still sending a courier to fill in the form, take a photo of potential customer's passport and his or her face. So it's a good question. It actually comes to my next topic about the AI in fintech. So let me first answer this, and then I jump to more broadly talking about AI. So I think that's actually what matters and what the financial technology companies are solving for, is not to create the experience where someone needs to wait for the courier to come and make a photo or sign certain papers, and the experience moves to a more and more like 100% online and digital experience. So if it's still happening, and it means that there is either no way to solve it in a digital way, or it is not yet implemented. There are plenty of challenges, and ID verification is one of those. Of course, when it is a digital experience, you need let's say the system or the financial institution needs to verify that actually the user who is sitting behind the computer or behind the smartphone is who the user claims he is, and also be able to confirm and then to regulator in case of audit that why the user been given a credit product. So in every country, in every in every country and every sector, its own landscape, how the verification is happening, but more and more verification happening in terms of taking your smartphone and making a picture of the documents, either of your ID card or the passport, and taking a selfie. And there are the algorithms that then verify a lot of things, starting from whether it's actually the document that was requested, the actual passport, the format is as requested, whether it is the forged document or not. Again, there are technologies that are doing it and verifying whether you just upload it somewhere from the internet, someone's passport, edited the name and made a photo of it, or whether it's actually the genuine document. Again, there is a match between the photo on the ID card and photo on the selfie, verification of the liveliness of the selfie, that you didn't just make a photo of the photo and send it to your bank or financial company. So there are a lot of technologies for this. On the signature as well, in some regulation allows just digitally agree with the term and conditions that by default means that you make a signature on the document. If in some regulatory landscapes, the signature is actually required, and it can be digital, or it can be, again, the user makes a signature and make a photo of it. So it all depends on the landscape where it operates. And basically companies operating in this landscape are looking to adopt these technologies in order to prevent fraud. In some cases, mobile number can be used to verify the user and send some OTP, one-time password to the mobile so the user can enter it. Very often, I see the company starts using biometrics, and biometric, it can be around how you move your mouse or how you type. For example, when someone is asking you about your income, and the first you type 10,000 and then you type 100,000. So a lot of this behavior is captured, and then the data is analyzed and shows, for example, based on this probability of someone being an intentional fraud. So different types of fraud again exist, and The aim of the financial technology companies to use AI technologies and data is exactly to solve these problems, because well, to solve these challenges rather than problems, because in a digital world, a lot of things that were obvious and easy to verify in offline world now become more and more challenging. And I think there was a question about cybersecurity, and again, this is where all the fraud prevention mechanism exists to prevent as much as possible the fraudulent behavior. So someone who is creating the fishy account or the fishy payment link where the user goes, pays, and the money end up being someone else's account and not on the company you're paying to. So a lot of this behavior, I would say, again, is not covered 100%, but more and more solutions are appearing to address a specific problem. Just give you an example as well of India, where there is a big variety of bank accounts, and there are type of kind of bank book. It's called passbook, where basically, like in the old times in Russia, we were going to this big bank, and the agent were writing with a hand the transactions that was happening. So this kind of passbook I still use in India, and the more you go into small cities and villages, the more you find this kind of documents. And like a few years ago, there were no technology that could read the scan copy of this document, because again, multiple formats, the handwriting, a lot of difficulties with the quality of the documents in order to identify and organize the data in a structured way. Nowadays, there are already few companies that are doing it successfully and verifying together with this whether the document is authentic or not. So the technology is developing with a big speed to satisfy the needs of the companies. And just coming back to my slides, basically, if you are talking about lending space specifically, there are multiple AI solutions that already exist in some way or the other, which historically the industry started with basic credit scoring and underwriting automation, where the traditional bank, for example, application forms were replaced with a digital solution, and on top of this, there were machine learning models created to evaluate the probability of the user being the credit-worthy customers. Traditional banks were largely using linear models or logistic regressions to do the evaluation. Now you can easily see the startups using random forest or gradient boosting models to do this type of evaluation, and being one step ahead in terms of accuracy and more robust solutions. Fraud prevention and QIC or AML, anti-money laundering solutions as well is the second use case, is the biggest use case for this type of solutions, again, because the solution, the experience is 100% digital, but there are a lot of compliance that needs to be satisfied and regulatory requirements in order to serve the credit product. But together with this, they firstly mentioned a lot of trends in fintech industry are happening around personalization and providing more and more customized solutions for the users. So this is where the personal assistant chatbots are happening. The recommendation engine. So the story came from the likes of the YouTube or Amazon or Netflix. These are the biggest companies who actually build the basics of recommendation engine. Now the financial technology companies start addressing as well this demand and using more and more of this type of solutions in order to propose either different financial services to the users, upsell, cross-sell, or even propose certain deals when they're directly connected to the merchant. And if the user said bought the new table, they propose him to buy new chairs, for example. Well, very simplified, but just to show you how it works in the financial technology world as well. The next application is debt collection strategies as well. Obviously, with the credit risk, there is always a risk of default, someone not paying back, and this is a segment where a lot of companies are appearing as well. It's no more the collectors going to the people knocking on the door and trying to take money, but there is much more intelligence based on the data. For example, whether the user is happy to receive a WhatsApp call, or whether he actually is working and doesn't accept the calls during the day, and it's better to call him in the evening and to remind him about his debt. A lot around the channels to be used, the content of the message to be used, and so on. So that's another aspect of this. And of course, just general purpose predictive analytics around mining the data, around understanding the trends, the user behavior in a much quicker and a much more agile way. Just to show you how the markets geographically are developing in terms of the growth, this AI for the Fintech specifically. There is no data for Russia, so apologies for this, but you can see that actually Asia and Australia are developing in a much, much faster way. Europe and US and the middle, and of course Africa and South America are a bit behind, but still rapidly picking up and developing the AI technologies as well. And just show you some research that has been done for the trends, specifically for applying AI in the financial technology sector. And actually it confirms more what I've been already talking about, that majority of the financial technology companies are looking at using AI for removing friction from the customer journey. So if I know the customer well, if he's coming from a safe device, from the location I already seen him coming, why should I ask him to provide additional documents or ask him additional questions? So that's what AI allows us to solve for. To differentiate between risky and low risk users and create this customized experience. Open banking as well. I've been talking about the opportunity, especially in Europe, for the bank to exchange the financial details of the user, of course, with the consent, but in an automated way, and a lot of solutions are currently built around it. All right, let me jump to the questions. I mentioned here at the end a few resources for those who are interested just to follow the financial technology market and to read more about any aspect of it, about the different players, about the unicorns, about AI technology as well being used, about the different deals happening. So welcome to go to this site. So there are also podcasts that allow you to learn a lot about the sector. And let me go back to questions and address some of these. Right. About the governance, right? And about the cryptocurrency. Well, I think more and more, I believe in cryptocurrency myself. I'm very optimistic about this. I think more and more interest is coming specifically from the government and how these currencies can be used together with the key currencies. I think at the moment is not probably getting as much attention as needed, because there is still a lot to bring the population in the digital world. There is maybe the generation of our parents or grandparents, well, probably my parents, not yours, but I think still that not yet sufficiently digitized and not using the technologies. But if you could see the trends of different currencies and the demand for this, I definitely think that there is a future for this currency that can be much more stable. The operations can be much better tracked, and the easier enforced, all the regulations around it. So I truly believe that the cryptocurrency will be blooming in the next decade for sure. I'm not sure about Elon Musk, why he's becoming to reject Bitcoin payments. Yeah, no idea. I think I probably wouldn't recommend to look just at what Elon Musk is suggesting. I don't see him as someone who can predict the future with 100% accuracy of what is happening. I would rather look at the trends on the investments, on the venture capital. That's where the companies investing, especially in the new segments, but not to Elon Musk. Well, my personal thought, so obviously, not necessarily you can follow it. Right, there was one question about internship and Python programs at this morning. Yes. They actually do have internships. They have a lot of programs for the new joiners across multiple departments, product, data science, engineering. Now, especially with the pandemic, the company is working 100% online, and well, you could see what is happening in India now. It will probably continue working online for some time now. So if you are interested, feel free to send me to express your interest, and we can discuss offline how to organize it. And yeah, if you're interested to join me, you can find me on LinkedIn. You can find me on Twitter as well. So yeah, I hope I give you some insights of what is happening in fintech, what is the future, and I'm sure you'll see a lot of cool stuff happening there. There is still a lot of dynamics. I told you that the market is starts to be getting matured, but still a lot of deals are happening and new joiners are coming. So a lot of exciting times ahead of us.
Natalia,
and thanks a lot.
Thank you very much for this exciting guided tour to the world of fintech. It looks like a little bit like a wild wide west for us from here, but I think with such people and I don't know, graduates of HEC, especially of the Faculty of Economic Sciences, it can be more sustainable, right? So I really thank everyone for their patience and great questions. Please, you made really a great discussion today, and everyone have a good evening, and see you at HEC. Okay.
Absolutely. Thanks a lot. Very engaged audience, and you guys have very thoughtful questions. Thanks a lot for taking part in this.
Thank you. Great. Okay. See you. Bye-bye.
Thank you. Bye. Bye.